Hello, I am technology information student. This is my presentation in English. Business continuity audit and disaster recovery. Introduction, understanding the basics. Definition and importance. Business continuity, BC, and disaster recovery, DR. What do they mean? The critical importance of BC and DR in ensuring organizational resilience. Key objectives. Minimizing downtime and data loss. Ensuring continuity of critical business functions. Protecting the organization's reputation and customer trust. Business continuity planning, BCP. Risk assessment and analysis. Identifying potential risks and vulnerabilities. Assessing the impact of disruptions on business operations. Developing a business continuity plan. Creating a comprehensive BC plan tailored to the organization's needs. Involving key stakeholders in the planning process. Testing and training. Conducting regular drills and exercises. Training employees on their roles and responsibilities during a crisis. Disaster recovery, DR, strategies. Data backup and recovery. Establishing robust data backup procedures. Implementing efficient data recovery strategies. Infrastructure resilience. Ensuring the resilience of IT systems and infrastructure. Implementing redundancy and failover mechanisms. Communication and coordination. Establishing effective communication channels during a disaster. Coordinating with internal and external stakeholders. Auditing business continuity and disaster recovery plans. Overview of BC and DR audits. Why conduct audits? The role of audits in continuous improvement. Audit criteria and standards. Reviewing industry standards and best practices. Establishing internal audit criteria. Conducting BC and DR audits. Preparing for audits, documentation and preparation. On-site assessments and evaluations. Continuous improvement and adaptation. Feedback and lessons learned. Gathering feedback from audits and real-world incidents. Implementing changes based on lessons learned. Regulatory compliance. Ensuring compliance with relevant regulations and standards. Staying updated on changes in compliance requirements. Conclusion, building a resilient future. Summary of key points. The interconnected nature of BC and DR. The role of audits in strengthening organizational resilience. Call to action. Encouraging ongoing training and awareness. Emphasizing the importance of a proactive approach to BC and DR. Feel free to expand each section with more detailed information, examples, and case studies that are relevant to your audience. Adjust the content based on the level of familiarity your audience has with business continuity and disaster recovery concepts. 1. Definition. An audit is a systematic and independent examination of financial information, operations, processes, or systems of an entity to ensure accuracy, compliance, and reliability. The primary purpose is to provide an objective assessment, often conducted by external professionals, to enhance transparency and accountability. 2. Objectives. Financial accuracy, ensuring the accuracy and reliability of financial statements and reports. Compliance verification, verifying adherence to laws, regulations, and internal policies. Operational efficiency, assessing the effectiveness and efficiency of operational processes. Risk management, identifying and mitigating risks associated with financial and operational activities. Internal control evaluation, reviewing internal controls to safeguard assets and ensure data integrity. 3. Process. Planning, defining the audit scope, objectives, and methodologies, and understanding the entity's operations. Fieldwork, conducting on-site examinations, gathering evidence, and performing tests to assess controls and operations. Analysis, evaluating collected data, identifying discrepancies, and assessing the overall effectiveness of processes. Reporting, communicating findings, conclusions, and recommendations in a formal audit report to stakeholders. 4. Types of audits. Financial audit focuses on financial statements to ensure accuracy and compliance with accounting standards. Operational audit examines processes and procedures to enhance efficiency and effectiveness. Compliance audit verifies adherence to laws, regulations, and organizational policies. Information systems audit evaluates IT systems, data integrity, and information security measures. Performance audit assesses the effectiveness and efficiency of programs or functions. 5. Auditor independence. Auditors must maintain independence to ensure impartiality and objectivity in their assessments. External auditors are typically independent third parties, while internal auditors operate within the organization. 6. Benefits. Reliable information. Audits provide assurance regarding the accuracy and reliability of financial and operational information. Risk mitigation. Identifying and addressing risks helps prevent financial loss and operational disruptions. Compliance assurance ensures that entities adhere to legal and regulatory requirements. Operational improvement identifies areas for improvement in processes, controls, and overall efficiency. 7. Continuous process. 8. Auditing standards. Auditors adhere to established standards, such as the Generally Accepted Auditing Standards, GAAP, for financial audits or the International Standards on Auditing, ISA. These standards provide a framework for conducting audits and maintaining consistency in the audit profession. 9. Regulatory oversight. Auditors may be subject to regulatory oversight by professional bodies or government agencies to ensure adherence to ethical and professional standards. Regulatory bodies often set guidelines and requirements for the conduct of audits to maintain quality and credibility. 10. External and internal audits. External audit, typically performed by independent external auditors, focusing on financial statements for the benefit of external stakeholders, such as shareholders and regulatory authorities. Internal audit, conducted by internal auditors employed by the organization, with a broader scope covering operational efficiency, risk management, and compliance. Internal audits help management in improving internal controls and processes. 11. Risk-based approach. Modern audit methodologies often employ a risk-based approach, where auditors prioritize areas with higher risks of material misstatement or operational inefficiency. This approach ensures that audit efforts are focused on areas that are most critical to the entity. 12. Follow-up and monitoring. After an audit, entities typically implement recommendations provided by auditors to address identified issues. Continuous monitoring and follow-up audits may be conducted to ensure sustained compliance and improvement. 13. Forensic audits. In cases of suspected fraud or financial irregularities, forensic audits may be conducted. These audits involve detailed investigations and the collection of evidence to support legal action if necessary. 14. Ethical considerations. Auditors are bound by a code of ethics that emphasizes integrity, objectivity, confidentiality, and professional competence. Maintaining ethical standards is crucial to ensuring the credibility and reliability of audit reports. 15. Technology in auditing. Advancements in technology, including data analytics and artificial intelligence, are increasingly integrated into audit processes to enhance efficiency and effectiveness. Technology also plays a role in assessing cybersecurity measures during IT audits.